Hey guys, welcome back. In today's video, we are talking about the AMC bullish news, the 1.46 billion short shares, margin calls incoming, and many more in this video. First, we're taking a look at this. Look at the news for AMC from the last few weeks. Delete all the paid opinion pieces. This is what you are left with. Things look really bullish for AMC. Now, what we have seen on for the media is that constantly market makers, hedge funds has worked with different media firms to release articles on certain stocks to push their price down, or at least to benefit the decisions that they have made. This isn't something that I'm just saying. This is something that has been proven. They've done this not just for AMC, but for multiple other companies as well. But in this case, we know that they do it severely for AMC. So if you're able to filter out what are the actual objective, non-biased news for AMC, this is what we're left with. I want to make it clear quickly is that, of course, don't just look at the good news for AMC and ignore the bad news. If the bad news for AMC is objectively bad, that's something we have to address. But if these bad news are created for the sole purpose to match the hedge funds actions on this stock, then that's something you got to ignore. Now, in this case, if we're taking a look at the non-biased, the objective news of AMC, you're seeing obviously what's happening. Firstly, we know with AMC, with the theater upgrades, this is something we have seen in the past. We've seen the double-digit growth that they are currently doing. We see the box office recovery, which is something that we still are seeing and is improving. And then we're seeing the higher revenue. So these are obviously the objective news about AMC. And we can talk about all of this as well, because theater upgrades has been something that's been talked about for AMC for a very long time. One of the biggest things that they have realized and that we talk about on this channel has been this premium theater. We talked about how viewers wanted a more premium experience. And so by having and creating these premium theaters, you're able to attract more viewers. You're able to attract more attendance. And that's what we are seeing for AMC. And that's exactly what we are getting with AMC. But this is the thing that people are ignoring because they're looking at other particular piece of news. When you look at what they're actually doing, this is what they're doing. The double-digit growth is something we talked about as well. Box office recovery, you should see by now with how well it's doing, and then the high revenue as well. We're seeing how AMC is making record weekends. We're seeing how some of their EBITDA are improving, and so that's only going to get even higher. Like I said, and I want to make this very clear, there will be actual bad news for AMC. That's very, very normal. And when we do see those bad news, we obviously have to understand how it affects AMC. But we can't let what the media and the hedge funds create these false narratives about AMC get to people. That's what you have to be able to differentiate. Another reason for how we know that AMC is doing well, how we know the box office is doing well, for Q1, we're seeing how well it's doing. And we've seen how, firstly, the average is, of course, getting higher. And we're going to be looking at even more movies this year. We're now slowly recovering from that hype from the early years. And we're going on a steady growth. And that steady growth is exactly what we want. We've already talked about AMC efficiency in terms of understanding, even if the box office were to remain the same, AMC is able to make more money. However, what would be even better than that is obviously if the box office were to get even bigger and we are then able to make even more money. And so that's exactly what we are seeing, and that's what we were hoping for the whole time. Another comparison for AMC is AMC against the streaming services. So right now we're seeing how streaming services are increasing their subscription prices. And this is something that people have voiced their concerns about. Now for AMC, we obviously have the A-list. And this is something that I've seen many users who have it to be very, very optimistic about. If you also have the service, comment down below if you think it's worth it or not. But essentially, this is something that has allowed people to go watch movies at a cheaper price. And so this is something that what we are doing as well. And because we're keeping it cheaper, because it is nowhere near what these streaming services are offering, this is something that has led to more attractiveness. And another big thing about this is, of course, is how we're seeing these streaming platforms to come to AMC to ask to partner with us because they've realized what we are able to do. They've realized how much attention we are actually bringing. Another big thing to talk about how well the box office is going to improve. You can see Enjoy This Friday is the last one before an avalanche of movies starts printing money. So we had Project Hail Mary who begun it. And then we have Mario next week, The Michael, Devil Wears Prada 2, Mortal Kombat 2 and Top Gun 40th anniversary and Mandalorian, and so much more going into the end of this year. So this is already looking like a great lineup, and we're only going to be looking at the box office get bigger and bigger. If you want to see some of the movies that are projected, the Michael Jackson movie is projected to generate over $100 million in its domestic opening weekend. This is nearly 2 times bigger than the Bohemian Rhapsody domestic weekend. So what we're talking about in terms of how well these new movies are getting released, how well it's going to do, this is what we are seeing. And this is exactly why we talked about how AMC were able to grab their share of the market. AMC has been planning to do premium theaters, and they've cut down the lower profitable theater locations. They've opened up in more profitable locations, purely based off the fact they know that this was going to happen. They knew the box office is only going to get bigger and bigger, and they wanted to captivate on this, and that's exactly how they are doing. And on the other hand, what we have is that, of course, when you have these media articles telling you to sell, this is something we talked about how you got to be able to filter those out. You got to realize what the actual non-biased objective news are for AMC. A lot of apes sees this and they understand what's going on for AMC. We're used to the manipulation. We know what they're trying to do. You can see from this particular ape who have accumulated thousands of more shares this year, and he has been buying and holding since 2021. But it doesn't obviously stop there. You can see this user as well, 1,100 shares of AMC. And so this is what we've said. And you can see here, as an AMC shareholder, there is no one I would rather have running AMC other than Adam Aron. He has transformed AMC to take advantage of the robust movie slate over the next 3 years. Short sellers will manipulate the share price to prevent him from raising cash. I stand with AA. And so this is what we've said. You get the haters, you get these media articles that are just trying to spew nonsense on AMC. And I've always said AMC isn't perfect, Adam Aron isn't perfect. There will be mistakes that they've made, but they've done more good than bad. What they're always trying to do is to take AMC to the next level. And we've seen exactly how Adam Aron has been able to take AMC to the next level. We've seen the investments they've made, we've seen the improvements they've done. Now, you could argue that potentially someone else is able to take AMC to an even higher level. That is always a possibility. However, we haven't seen that. What we have seen is how Adam Aron was able to transform AMC. And so that's what we have to ultimately realize. And this is how we are fighting against the short sellers. And we also understand is that one of the biggest reasons is that every time AMC has tried to raise money, we've seen huge manipulation, because shorts understand is that if AMC were to get their hands on a lot of cash like GME does, AMC would do a hell of a lot better than it already is doing right now. Bear in mind, if AMC, and this isn't to talk bad about GME, this isn't to raise a competition, but in my opinion, if AMC had as much money as GME, they would be in a way bigger position that they have right now. The reason why I say this is because we always made this comparison. We always talked about how each company has their pros and cons. AMC has a working business operation, business structure, but they have little cash in comparison to GME. GME, their business operations are still not as developed as AMC, but they obviously have a lot of cash. And we've always said, if we are able to combine them together, it just makes a powerhouse. So had AMC had as much money as GME, you could just imagine the behemoth it can become if we had that much. Another big reason to talk about why we say manipulation, how we know they're trying to prevent us from raising money, is because of this. What we can see is the average dark pool volume for AMC for the past 30 days at 72.61, with the average lit volume being 27.39. Essentially, only 1 in 4 shares are hitting the lit market. So only 1 in 4 shares have the ability to actually impact the price of AMC. Now, what's even more of a coincidence is if you take a look at the inflow outflow for 100% of the net flow, 75% is inflow, the 25% is outflow. So what do we have there? We have 75% of the total capital from AMC right now, the total volume, 75% of that being buy volume, 25% of that being sell volume. You can see how that matches with the dark pool average, 75% being dark pool, 25%, or in this case, 27 to 72% being lit exchange. So this is how we know that the majority of buy orders are going into the dark pool. The only orders that are having effect on the market right now are the sell orders, and people think that it's because the majority is selling, when in actual fact Only 25% of it is selling, but only that 25% is hitting the market. And that just talks about how crazy this whole thing is. You have to understand another way of manipulation we've seen in the past, where AMC and GME were halted 38 times in a single day. And this was pretty much the biggest confirmation we needed to talk about how AMC has the ability to bankrupt these hedge funds and market makers. And it's why to this day that still exists. Because if they weren't afraid of what AMC and GME could do, they won't hold AMC 38 times. Remember, the premise of these holds are so-called apparently to protect the retail investors. But when the majority of buyers in this are buyers or retail investors, and the majority of short sellers are market makers, and the price was going up, and you halt it to prevent it from going up further, how is that protecting the retail? How is that not protecting the market makers? And so this is how we know that AMC and GME has the ability, and is why they're trying to prevent this at all costs. They're trying to drag this as long as possible to make people double think about what this can do. And people are forgetting about what we once did in the past. You can see even here as well, 1.46 billion is shorted. FTDs are over 177 million. Where if we take a look at the synthetic short position, you can see 1.46 billion, 279%. That's for AMC. We're looking at 1.66 billion for GME with a 406% short interest. Now, a big part about this is that we've already said this is why this so-called short interest that are being reported, you can see the official short interest, this is the data that you have access to, showing 23%, is something we should never believe. But then even at that point, you have to understand the data, and we talked about this as well, how they were able to gather the short position is through a series of using FTDs, using other various data, but there is still a lot of data that they have actually overlooked. So even then, what we're seeing is that the very minimum short interest for AMC right now is 279%. The very short minimum short interest for GME is 406%. So now you understand why they had to hold AMC and GME 38 times. And this is why we said margin calls incoming. Don't be surprised if AMC goes all-time high too fast in one day. Remember, no one knew AMC was going to go up that day. No one also knew that AMC was going to get halted 20 plus times that day. And so this is why we can never give a date. Is that we know as long as the pressure is still there, as long as apes have not left, as long as AMC is not bankrupted, the synthetic positions will always exist there. And it will only be a matter of time. It will just be one day where we don't know, but suddenly the short sellers will start all scrambling because one of them gone bankrupt, and it causes the price to go up, which causes another short sellers to bankrupt, and it creates this snowball and domino effect. And that's what we're waiting for. And that's how we know is that people are always waiting for this. The hedge funds are trying to prevent this because they know that it will allow AMC to go into the thousands insanely fast, and all of these short sellers will get bankrupted and margin called. You can see shorts still trapped. The float, we'll talk about flow getting obliterated, liquidity dries up, borrow fees go vertical, and then everyone rushing for that exit. This is what we're trying to look for. And we have to understand this can happen at any day, any time. Just like no one knew the 08 was going to happen, or at least no one knew on that day it was going to happen, the same thing exists for here. The same thing applies here. And so you can see how they're trying to prevail this. You can see how they're trying to actually prevent this and prolong this whole process. Because they're trying to create the tokenization of stocks. Now, tokenization for stocks doesn't create opportunities for retail to invest 24/7. It only creates more synthetic and phantom shares. And this is something we talked about. Yes, it allows the market to open 24/7, but they have to realize that we already have cases of how tokenization has been used to suppress stocks. In this example, AMC and GME. And so until they actually talk and actually figure that problem out, I don't think it's a good idea for them to actually tokenize stocks, because we've already seen the synthetic positions, because we've already seen the impact and the harm it has done on AMC and GME. They really need to figure a way out before they actually roll this out. You can see how brokers are trying to have mistakes all the time as well. And there's, again, another big reason for why I don't think we should roll it out. What we saw for Charles Schwab is apparently they had a system failure yesterday. Now, essentially for this particular user is they've made a trade, but yet it said that they had a system failure. And so this is what we said with how brokers aren't here to help out retail investors. They're here to protect themselves. And in some cases, the market makers, like we've seen in the past. And so with this tokenization, with everything, I think the biggest thing they should focus on first is regulation. An example here, GameStop coin price at 100 trillion. So this is obviously a crazy amount. Now, no one still has an exact idea on why this is happening. We think it has something to do with the naked shorts potentially covering, and it allows the price to go up. No one has any kind of just 100% understanding of this. But the very fact we are seeing the coin that is to do with GameStop is in the 100 trillion. That itself is already something super crazy. And this is off the back of how Ryan Cohen pledged 700 million cash as collateral for derivatives after hinting at a massive consumer acquisition. Now, we've already seen, we talked about this acquisition already for a very long time, and there are still rumors. Some people are saying PayPal, some people are saying eBay, some people are saying Corsair, the list goes on and on. What we do know is that as so far right up until now, it has been extremely hyped up. It's supposed to revolutionize the whole industry, and I hope it does. And so that's why we're keeping obviously a close eye to it. But so far, there has been no concluded news about this. Now, let's talk about the volatility that's in the market. We've seen how well AMC is doing. We've seen how well it's surviving. Same with GME. The market, on the other hand, overall market is not doing well. S&P 500 falls below 6,400 for the first time since September 2025. We are now just 90 points away from entering correction territory. That is already a very concerning piece of news, especially with everything that's ongoing right now. And it's precisely because of what's ongoing in the world right now that's causing this to happen, along with the AI boom. Another thing to look at is how UBS having to freeze up, and what we saw was a liquidity crunch on 407 million euros. And this is what we've said. UBS, we're seeing how these short sellers of AMC, of GME, all come into difficult positions. UBS, we obviously know they hold on to the swaps of AMC and GME. And now we're seeing them facing problems in other places, but it ultimately has an effect on the swap positions as well. And we could be seeing the offload of that. You have to remember what's going on with them right now. It's just seeming like the beginning of a repeat of the Lehman Brothers in 2008. And so if we see UBS break up, if we see UBS go insolvent, going back to what we said with the AMC and GME swaps, that's something that will have a massive effect. And it will either be that they have to cover the AMC and GME swaps, which triggers the squeeze, making AMC worth thousands, tens of thousands of dollars, or they have to then dump it to another hedge fund. Now, dumping to another hedge fund is not a bad thing, because what it does is that, yes, it then doesn't trigger the squeeze. If another hedge fund was able to hold up and buy up all of those swaps, then it will not trigger the squeeze. But it would then just repeat this whole situation. The only reason why UBS is facing liquidity problem right now has been because they picked up these swaps. We've known that ever since they absorbed Credit Suisse, they've been in a very bad position. And the AMC and GME swaps came from Credit Suisse. And so if we see another hedge fund actually holding onto these swaps, we're going to be seeing another hedge fund that breaks up. And then the original position that they had and these new swaps that they have will then be carried over to another hedge fund, or it will be covered triggering the squeeze. So you can see how ultimately this is good news for us and why hedge funds have been worrying. Another big thing, US banks who are facing unrealized losses of 306 billion. This is something that we've been talking about for a very long time now. You shouldn't be surprised at this, but you should be concerned about this. And the only reason, and this is the technique we've talked about before, banks, when they're in their earnings, when they report their earnings, they are always in profit. The reason for that is because they don't close the positions that are not in profit. So they may report that they are in a profit of 50 billions, or they made a profit of 50 billions that quarter. What they don't report is that they have an open P&L position of negative 300 billion that's open, that they're not reporting. And so we're not surprised by this, but we are extremely concerned and worried about this, because this could easily trigger a series of margin calls and liquidations if things were to go south. And talking about the trigger, what we're looking at is USD JPY breaking 160. Now, the Bank of Japan is going to intervene again, so we're going to be seeing that volatility happening again. We already see how this had a massive effect on tech stocks because of the Japanese yen carry trade. We've talked about it, and this is what we're seeing. On top of that, the 10-year bond yield again going and ramping up, and this is to relate with the Japanese yen carry trade once again. We've seen how that already has had an effect on Nvidia, on Palantir, on all of these AI stocks, and you're going to see that if this continues, it will have an even bigger effect. In terms of US yield, 20 yield back above 5%. The US bond market in major trouble, as we're seeing 10 years yield up, 30 years yield up, 2-year yield up. All of this is happening right now because of what's happening in the global news, because of the Iran whole situation. This is what's happening. Another thing is that earlier we talked about the negatives on the stock market, the worrisomness of the stock market. And then you can see how Citi had just started dumping US stocks because they're worried there is no quick end to the war. Now, this is the biggest part, because if we are seeing the dumping of stocks, if we are seeing the collaterals fail, you're going to be seeing margins being called. You're going to be seeing hedge funds worried. And this is exactly what we've said with the start of the AMC squeeze. As we see the whole market being dumped off, as we see everyone selling their stocks and all of these stocks go lower in value, so does the original collateral. And when those collaterals go zero in value, they will have the money and capital anymore to continuously short AMC. And that's what we're going to be looking at very, very soon. And on the other hand, the banks who are selling the stocks right now because they're in panic, who are trying to shorten the metal market, are seeing the massive green candles that are happening, are seeing how gold prices are extending, silver prices extending. And that itself is obviously very worrying, because we've always talked about this. The reason why we know the silver prices and gold prices is going to go up is because the physical inventory is seeing the demand still being there. And that itself is the biggest thing we need to know about whether or not the prices are going to go up, whether or not people are still in need, if we are seeing the physical demand going down. Or rather, the physical demand going up and the physical supply going down. As always, now, this is financial advice. I do take guys are going to sell, make sure you do your own due diligence research, and I'll catch you guys next time.